Okay, fantastic. Thank you for joining me, Alex and Emily. It's another episode of the future of the built environment. The series we've been running, and today we've got a really great topic that I'm keen to talk to everybody about. The title being ESG or ROI, the battle for the built environment's future. So I will do a brief introduction myself and then introduce the guests. I've got my fourth guest just joining us now. Angie's here too. Hello, Angie.
Hi.
So a quick intro from me, and then I'll allow the guests to introduce themselves. My name's Alex Whiffin. I'm the MD and co-founder of Cherry Pick People. We're a consultancy that specialises in talent solutions within the real estate and prop tech space. So we partner with purpose-led business leaders and innovators to help them build culturally rich, diverse and high-performing teams. We do this through helping them develop robust and talent processes and delivering on search and selection projects to ensure that they engage and retain the right people for their organizations. So that's a brief little introduction from me. Alex, do you want to give us a quick intro and say hi?
Yeah, thanks for having me. First of all, I'm Alex. I'm one of the co-founders of Enter. I have a background. I'm a trained architect and certified energy efficiency engineer. It's a very German thing to be, but and on Enter we founded Max Justus and I founded Enter 2020. And initially started off in the B2C market, where we are the biggest player in Germany when it comes to supporting private homeowners in understanding the energetic condition of their homes and enabling them to retrofit them, from receiving subsidies over finding fitting contractors to actually execute the work. And since 3 years, we are also doing this in the commercial field, helping major real estate companies. Basically similar things, understanding the energetic condition of their assets and helping them make the right decisions towards decarbonizing them. They look at assets slightly differently than private homeowners, but at the end of the day, the discussions are kind of similar, just on a bigger scale.
Fantastic. Thanks for that, Alex. Angie, do you want to give us a quick intro?
Yeah, absolutely. Thanks for having me, Alex. I appreciate it. So I joined the Aroundtown SA group in January to build and lead ATechX, which is Aroundtown's prop tech startup growth program. At ATechX, we identify, mentor, and test early stage prop tech startups that we believe can create meaningful business impact for Aroundtown, but the startups also benefit from collaborating with us. Before this, I led Asia's first PropTech accelerator program for a large public listed real estate company in Bangalore, India. And before that, before the journey with PropTech, I spent a decade building and scaling businesses across industries and geographies, startups, medium-sized businesses, did a consulting stint in New York with Deloitte. So I have a variety of experiences, with kind of focus on innovation and leveraging technology to transform businesses.
Amazing. Thanks, Angie. And finally, Emily.
Hi, thanks. Thanks, Alex, for inviting me on. I'm Emily. I'm the ESG and finance manager at NOAH. NOAH is Europe's largest built world tech venture capital firm. We were founded in 2019 as AO PropTech and rebranded earlier this year as NOAH to kind of highlight our shift towards a broader thesis around the built world. We have about $500,000 AUM, and we invest in early stage companies across the built world with the vision to decarbonize the built world. My background is in finance, did 5 years at PwC, and then moved into sustainability at a FTSE 100 company focused on renting construction assets. Excited to be here. Thanks, Alex.
Amazing. Well, look, thanks for joining us. And just before we get stuck into it, I see a couple of people have said hi. So like Roger, hi, always good to see you, and Brooke as well. And I'd like to make this discussion as interactive as possible. So any of you watching out there, please do post your questions, and I'll field as many to the panelists as I can. So yeah, thanks very much for joining us and watching. And like I say, please do interact as much as possible. So to kick it off, the first question is, why is the built environment so critical in achieving global sustainability targets? And what makes ESG and ROI sometimes seem like opposing forces? Emily, do you want to kick this off for us?
Sure, yeah. So I'm sure we'll say it 1,000 times during this this conversation, but the built world is the largest and most polluting asset class in the world. It makes up about 40% of greenhouse gas emissions globally, and so it is like fundamental to achieving our global climate targets. If we don't decarbonize the built world, we quite literally can never hit net zero, and so obviously that just creates a huge challenge, but also a huge opportunity. And I think that the reason that sometimes there can be this misconception around ESG being a conflictor to ROI is because there can be quite a lot of conversation around regulatory reporting, the burden that can feel like these additional requirements being pulled on companies to report on these things. And I think that's a misconception, because by embedding these ESG topics into your business, actually it's shown again and again that this can actually improve ROI on businesses. By companies that are making an impact, we're seeing a huge increase in investment in these spaces. And I'm sure Andy and Alex will have a lot to say on this as well, but we see it in venture capital firms. There's been a huge shift in people's perception of these businesses, and so it can feel like opposing forces because of the time it takes to embed these practices. But once they are embedded, they can really be a huge value driver for businesses. Definitely,
and you know, it is a theme that comes up in my conversations around, you know, that is there a productivity? Do you get an ROI from, you know, addressing the ESG challenges? Alex, do you have anything to add on this particular point?
Well, yeah, it's been said. I mean, it's the biggest polluter out there, and I guess one of the reasons is that I feel also the mindset change has been maybe a little slower in the built world than in other asset classes, where there's still, at least what I see in our daily practice, where there's, you know, people still see the huge upfront costs that usually are necessary to decarbonize existing assets. This is where we basically deal in the current built environment. In the existing built environment, we don't take care of new builds so much. So that is we're talking about huge upfront investments. Within an environment which, at least in Europe and in Germany, from a regulatory point of view, is, I mean, yeah, things are becoming more precise, but there's still a lot of insecurity about what's actually necessary. You know, politicians and the environment is also a bit flaky when it comes to setting clear targets, clear timelines, clear goals. So there's also, yeah, a bit of, you know, people are still trying to be a little opportunistic about it, rather than also aligning on a clear strategy. But again, also I totally agree with Emily that this is also happening more and more. The discussion is pushing towards energy efficiency and ESG as a profit center rather than a cost center, because you basically can't afford anymore to not take this seriously when it. Looking at several aspects, looking at the taxation of carbon emissions, over to rising costs of refinancing badly ranked assets, to several other aspects. It's just it's turning into a profit center more than a cost center, actually.
And maybe that is will help drive those initiatives, because you know, obviously it's been a challenging time over the last few years, and so, you know, that puts a squeeze pressure on achieving ESG targets, or if they're regulatory and that sort of stuff. So there's the sort of sticks element of it. If you don't have these regulations, you will not be able to make any money. But there's also the carrot side. So, getting some return on investment, can you make this more profitable? And there's some great stats around, maybe buildings that are ESG compliant or are very high in ESG being higher valued, returning better rents and that sort of stuff. But also, Alex, you mentioned about the existing, sort of housing stock and buildings. That's key, isn't it? I mean, that getting those up to date. It's all well and good getting the new stuff, properly, compliant and stuff. It's the existing stock that's going to be probably the bigger challenge. What are your feelings, Angie?
I mean, I agree. I think anything that happens, driven by regulation first is always sort of viewed as using the stick approach, right? And I think at least with us at Around Town, we're starting to see a shift in how we look at it. And I think Alex hit the nail on the head. You're not looking at it as a cost center anymore. You're starting to figure out how you make it a profit center type deployment in the business, right? Of course, it's always tricky and it takes time because potentially capex outlays are large to really move the needle, and it takes time, and therefore these decisions need to be looked at very carefully and thoughtfully. But we are seeing a shift in how we look at these, how we look at finding that balance between ESG and ROI.
Yeah, excellent. How would you define success in balancing those ESG goals with the financial returns?
I mean, look, we all, if you look at the EPBD directives of how much improvement you need to see in building stock, it's how do you meet those objectives without hampering shareholder return, right, on the business? And I think it is possible. It's challenging, of course, but that's how we define it at Around Town.
Yeah. And how about Emily and Alex? You got any clear sort of definitions on that for you?
I feel that's it depends. I mean, it's sorry to be opaque here, but I guess I didn't mention this in the introduction, but we are working on a couple of pilots together with Around Town also, and they do look differently at their portfolio as a publicly listed company than, let's say, social housing companies that have a huge, very old tradition in Germany, and that basically sit on building stock that's been paid off for half a century, and they just treat buildings or look at buildings differently, and they also treat ESG differently. So it's successful if it meets the strategy of the asset company, and this is also, I mean, it tends to be an ongoing discussion. This is also what we feel also where we come in, being supportive in enabling asset holders to make the best informed decisions for their long-term strategy when it comes to environmental issues regarding their portfolio, and those may differ.
Yes, of course.
Yeah.
Of course. And Emily, maybe you could help on. You might be able to answer this one. I mean, do you have any examples of businesses within the built environment that are successfully balancing the sort of ESG objectives with profitability?
I don't think I'm the best place to give like direct business examples, but I mean, from our perspective at NOAA, we try and give like support to our portfolio companies, and the whole aim is to try and help them balance their ESG objectives with profitability. So guiding them in, I think the main thing is around kind of focusing on the most material issues that arise for your business and not getting bogged down in trying to tick every single box in ESG. And I think that can sometimes feel like such a huge task. It's almost like where to begin. But it's remembering that ESG is kind of integral to your business risk management. And so it shouldn't really be separate. It should just be part of your overall objectives. And if you focus on the most material parts, that will actually just come quite naturally, and you will just find the business grows in a more resilient and more sustainable way, and you'll see long-term successful returns. And I think that's kind of how you can balance it, because it should just be part of business as usual. It's harder to do than it sounds, but if you focus on the material stuff as early as you physically can, it is easier to implement.
Yeah, what about you, Angie? What do you Have you got any examples of where you've seen it be
No,
successful?
absolutely. Emily's right. I think the most cost-effective and efficient way to incorporate and find that balance between ESG and ROI is, of course, when you do it at the design stage, right? But the larger challenge is on existing building inventory, as we know. We have seen a couple of examples actually of deployments and innovation that we believe are hitting a good balance. Things like the smart metering, as basic as that is one. Number two, kind of implementation of various data solutions that allow us to get our hands on where we stand on energy and heating consumption, right? We're starting to see solutions like solar plus storage alongside solar. We're hitting some of the ROI numbers, as well as moving the needle on kind of our carbon emissions. So we are seeing a fair number of solutions that do meet that balance.
Yeah, exactly. And do you do you see that there is more investment going into, Emily, well, any of the panelists actually going into businesses that are providing sort of the ESG solutions that are enabling better return on investment?
Yeah, we are definitely seeing it as part of our research that we've been doing recently. We've noticed that even our deal flow, so when we look at companies in the space, if we look back to 2019 and what we were looking at then, it was much more of the digital technology layer that kind of was trying to bring buildings kind of up to speed with other asset classes, whereas now we're really seeing a lot more of these more, we call them impact native. We have like buckets as part of our investment strategy, impact native companies coming out, and then the companies that support those more direct sustainable investments are also we're seeing those flourish. So the ones which kind of help deploy those assets in a more efficient way, we're also seeing a much higher intake of those, both internally and just generally across the broader ecosystem.
Excellent. Yeah, I mean, well, that seems like the sort of sentiment across the market, that there is a shift towards that. I mean, I think obviously there is imminent legislation on the horizon pushing that way. So obviously people are thinking about that from I suppose the sticks perspective. How are you finding things with your within your market space, Alex?
Yeah, I mean, to be honest, we're seeing more and more competition coming up, also raising financing rounds. So there's definitely movement. Whereas, I don't know, a couple of years ago, we were maybe to some extent pioneering certain things out there. We see, a lot of different players coming into this. I guess, if you went if you go to the to trade fairs, etc., like Expo Real in Munich, ESG was also a bit of a hype topic. There was basically, I mean, no startup or no established company that did not have ESG somewhere on their panel, etc. So you also have to be a bit careful and also be precise when talking about this. I feel this is a bit of a problem. What does it actually mean? Also, we don't claim to solve everything connected to ESG. For us, specifically, it's more the E and not so much the S and the G. So you need to kind of also dig a little to find out what people are actually talking about when they claim to solve problems here. But no, there's definitely a lot of movement and a lot of interesting things happening.
Obviously, the E is potentially I suppose the more direct, obvious sort of solution to a return on investment, i.e., saving energy and spend on money. Spending on energy to save to increase your return on investment. The S is maybe a little bit more challenging to quantify in that way. I don't know if anyone's come across any sort of solutions that are focused on particular areas of ESG that have shown a good return on investment. Have you seen anything, Angie, from your point of view?
I mean, definitely from the E, right? Of course, we have. like I said earlier, the smart
Seem to
metering.
have a little bit of a
Can you hear me?
Yeah.
plague with technical issues
Okay.
today.
Yeah, so definitely on the E. I mean, there's two benefits, right? If you classify them, one is the direct benefits. Let's say if you implement a hybrid small heat pump and reduce the size of your boiler for just extreme temperatures, your energy costs reduce dramatically, your carbon emission reduces dramatically, right? So there are certain definitely solutions that move the needle on that. That's the direct benefit piece. But then there's the indirect benefit piece, right? Where your property, like you said earlier, becomes more attractive for tenants. The valuation of your property goes up. Those are longer term, harder to necessarily sometimes quantify, but those benefits certainly exist. I don't think there's a question around that anymore.
Excellent. I did lose connection there for a second, so thanks, Angie, for filling that time. But yeah. So I mean, what my next question was regarding the within the EU's energy performance of building directive. It's mandating all new buildings to be net zero by 2030. How do you foresee this affecting investment strategies in the real estate sector? Emily or Angie, would you want to take this one on? I imagine it's more specific to you guys.
Go ahead, Emily.
Sure. So obviously regulation can often be like a very helpful driving force to changing investment strategies. I think that it will definitely prioritize retrofitting measures. I think we'll definitely see a higher intake on that investment area. I mean, we are already. Alex obviously sat here right now. And so it's a really important thing to be thinking about. Most of the building stock in Europe and North America is already built. And so I know obviously this is an EU mandate, but it just helps to show the importance of prioritizing retrofitting measures. And it will just help kind of push these to ensure we comply with the directive and focus on these energy efficiency designs.
Excellent. I'd like to take a question from the audience here. So Omed has kindly sent in a question. How can real estate portfolios be effectively restructured according to ESG criteria if regulatory requirements, EU taxonomy, are interpreted differently from region to region without losing significant market opportunities or scaring off investors pursuing short-term return goals? Who would like to take that one on?
Yeah, I guess I can say a little a bit about this, which also I guess also taps in a little bit to your next question, I suppose. I mean, yeah, this is an issue. We definitely see this. So, I mean, especially talking about the EPBD, which is now, I'm not so sure about the British situation, but in Germany now has to be implemented into national law. There's a timeline for this. The current government has already said we're not going to do it. We have new elections coming up. Nobody knows what's going to happen. If timelines are going to be met, and I feel this is a big and major problem in Europe in general, not so much only when it comes to ESG, that the frameworks and the regulations they don't mean so much anymore. People cannot be sure, and market stakeholders cannot be sure that that targets that have once been set will be upkept and maintained. Nobody knows if the next, I don't know, more conservative or more left government might overrule things anymore. So we have. I mean, in Germany, look at the car industry, where I mean, the current government is talking about reintroducing or lifting the ban on fossil fuels that has actually been agreed upon, and the car industry is saying, what the hell are you guys doing? I mean, we've abolished the production for these kind of engines. We can't change this just because you feel you can get more votes with this. And I mean, on a more abstract level, we have this similar struggle when it comes to environmental legislation. And yeah, I mean, I guess you can sense I'm getting a little frustrated with this because I mean, even if you want to go on a conservative roadmap towards reaching the climate goals. And even if Germany was to say we're not going to be better than the EU, and because Germany wants to achieve their goals by 2045, which I don't know, I don't see a lot of benefit in there. But head for 2050, but have a clear roadmap and stick to it.
Yeah, I love your passion there, Alex, and I totally agree. And that's a very good example of the car industry as well. Angie, can you see other challenges or opportunities, I suppose, in relation to, that target of getting net zero by 2050?
I mean, it's extremely challenging. I think, like Alex adequately covered on the regulation, on it sort of changing and sometimes being unclear. But I think also from just purely from a business standpoint, right? Like I said earlier, I mean, it requires a significant amount of capital outlay, number one. Number two, and I see a question on there about how technology can enable faster adoption. I think this is sort of linked to the answer. We're seeing the needle move dramatically with the adoption of tech. It is the only way going forward in tech and innovation, right? But the truth of the matter is some of these innovations are quite nascent. So they're not necessarily ready for deployment at scale. The costs sometimes are higher. Like if you just look at solar, right? I mean, just followed Wright's law, where the costs have come down by 50%. The productivity of solar PV infrastructure is improved. It takes time for some of these technologies to really kind of hit the ROI numbers, right? And therefore, in that period, while these technologies are kind of growing and becoming more commercially viable, it is a little bit more risky. It's a little bit more difficult, right? And it's things like the financial incentives that really kind of bridge the gap that make it viable until the point that these technologies can be deployed at scale. So there are absolutely challenges, but I think it just requires one to think about the business quite differently. It's why we started ATECX, which is because one of the reasons is we believe technology is the way forward in helping us respond to trends, to regulations around climate, working with these nascent technologies, influencing them in making sure that they can get to kind of that commercial viability as quickly as possible, providing the investments, I think plays a role. And so thinking creatively of how we can drive that ecosystem, I think we look at these challenges as opportunities and try to tackle that the best way forward,
Yeah, definitely. And I suppose, there's, the challenge of the legislation remaining in place as promised, so we can plan effectively. It is huge, and like you say, the technology is probably one of the really driving factors in terms of enabling this adoption and achieving the net zero. Because if we need the technology to, if we're talking just about energy usage, which obviously is a small part of it, you need the sensors in place, you need the technology to measure it and for us to understand what that what is being used, so we can see where we get to. Do you foresee any other sort of I suppose pitfalls or challenges that businesses may face trying to embed sort of ESG strategy over the next 5 years?
I think from my perspective, the biggest challenge is getting buy-in. I think that there's so much noise going on in the political environment that we're living in at the moment, in people's perception. There's been a big pendulum swing from ESG being like a great word to ESG being something people maybe don't want to talk about as much. And so I think that part of the challenge will be trying to get the buy-in from everyone. I know we're seeing a lot of buy-in from customers. They want particularly the younger generation, they want these technologies, right? They understand the need for them, the necessity of them. It's just, if we think about the built environment, it's like estimated that 70% of people will live in urban environments. So, I mean, if we don't change things now, it's not just not going to get better, it's going to get worse. And so we do see this, but at the same time, the ESG principles feel like a bit of noise. And I think it's just trying to cut through that noise and kind of explain why the ESG principles are the layer that we also need to implement, as well as implementing these technologies that we all see as vital, just so that we can both implement the technology, but also track to make sure that they're working how we expect that they're working, and be transparent about how things are happening. And that will actually see the change that we need to see by 2050, rather than just hoping that it's happening, fingers crossed, that this VMS system will change things. That's not necessarily going to be the case, right? So unless you have things hand in hand, we aren't going to see those change. And I think that's the biggest challenge, is trying to get everybody to understand that, and not see it as just a lovely box ticking exercise that everybody needs to do.
I think that's part of the thing. It's almost, the reason for this webinar. It can seem a little bit of a box ticking exercise, and particularly, or a nice to have in many respects. And so, when things are going well and businesses are making money in their normal activities, we'll be ESG, we'll attract people, sort of thing, tick, tick, tick. As soon as things get a bit more challenging, then it's like, well, actually, we don't need to do that. Or we'll just say we're doing it or whatever, to tick those boxes. So I think, there is a real need to show there is opportunity for return, for profitability of implementing these things. In an ideal world, you want the ESG to be also driving the bottom line. So okay, well, this is helping it's helping the world, and we're having a positive impact on the carbon and the climate change, but also it's making money. And there's some great stats in terms of the levels of the values of properties that are when they are fully ESG compliant, or when they go up from the EPC ratings in the UK. If you go up 2 brackets from E to C, for example, you get a 18% increase on the value and that sort of stuff. So these are some really good stats to drive that behavior. But is there more we can do to show that return on investment? I feel like a lot of it comes from, you need to do this as a regulatory requirement, as opposed to, this is a great idea for your business. Have you seen any of, I suppose, are there ways we can communicate that better, or I suppose for people like in your position, Emily, who are managing the ESG within an organization, how can they drive those decisions higher up the chain? How do they get the C-suite to sign up?
Yeah, I think we are seeing it, right? So it comes back to like those attitudes around, like, number one, customers are crying out for it. We're seeing the shift in people. There's been like a lot of studies showing that people are willing to pay a little bit more for something that's sustainable. So trying to drive that. We're seeing that to get high quality employees, you have to be embedding these principles. People want to work in places that have these embedded. And so that's also something that, you can encourage businesses to kind of look at. It feels separate, but it's so integral to producing a good ROI. If you have the right employees and good quality candidates in your business, then you will produce better returns. And so that's one side of it. If you embed it early, you see more resilient and long-term financial returns. It's less exposed to volatility in markets. It's more resilient. A diverse workforce as well, like, helps you create a more resilient team and creates new ideas. And there's lots and lots of evidence. It's not a linear track. So it's not like, if you embed this one principle and you start publishing your GHG emissions, all of a sudden you're going to see this huge ROI. You have to look at it in a holistic approach. ESG is so much more than just one metric, and it can be really difficult to see through the weeds and see that. But if you look at it on a broader scale and you think about the businesses that are kind of succeeding, you can see how, where they embed the principles, they've been able to overcome challenges more easily, more quickly, and with a better return. So I think that that's another part of how we need to change people's attitudes and kind of see the profitability of it.
Definitely. From your perspective, Alex, with what you're doing, do you see an increase in property values, or where do you see the value from what you guys are doing?
No, I guess I'm in the lucky position that not as Emily, I don't have to translate as much. It's very straightforward. And we are seeing that this is being more and more understood, because, I mean, let's be real, we are in real estate. People are number and money and value driven, and we are seeing more and more that we have the data that basically supports what you just said, Alex, that we have case studies where we can prove that retrofit measurements are cheaper than the actual value gain of a property you will receive after retrofitting an asset, especially if you factor in subsidies. We have cases where we can also show that due to the carbon taxation in Germany or in Europe, which is going to be rising over the next couple of years, will also be regulated. Currently it's capped. It will be deregulated by 2027. Also here, we can show that retrofitting a house, improving it energetically, will save you money depending on how you calculate the CO2 taxation to go. But we're talking triple digits per ton starting 2027. At least some forecasts are seeing this. Next step is we are also seeing a huge amount of pressure being issued by the whole financing industry, because those guys they are more interested in ESG or than the actual governments out there. So we see banks that are not willing to take on portfolios or assets ranked F or less anymore, or I mean, they might be talked into this, but they'll make you pay for this up to 0.5 to 1% of higher interest rates. Or we've had cases where we had to provide clients with documents telling the client or the bank basically what it will cost to retrofit an asset to a certain level, and the bank basically blocking this amount of money on the client's bank, or having this as part of the contract that the client guarantees to get this asset to a certain level by date X. So I guess it's even a nicer position to be in, because it's kind of straightforward actually when it comes at least to the E part, in trying to explain this to clients, because you can do this based on numbers, based on figures, based on economic discussions we have.
Excellent. And I suppose, are there ways that businesses or individuals can look to manage the E without a huge capital investment, or are there steps that they should be making to move that way until they, then?
Well, I mean, we are doing this. I mean, this is, I guess, where Angie is absolutely right, and this is where technology comes into play, also, especially when it comes to heat production and everything kind of connected to the technology, the existing technology in a building. It's horrendous to think of, but like, most of the heating systems can be so easily optimized to provide the same heating energy with 10 to 20% less fuel, gas consumption, etc. So it's not always about having to put the scaffolding in front of a building and insulating it and switching the windows. I mean, for some that might be feasible, and also some clients actually want the full package. But you can also do a lot with minor investments, especially when it comes to optimizing heating, stuff like this. Yeah. We're seeing a lot of promising startups out there. That it's not what we are in, but once we do the calculations and we see a before after, it's a lot of it's not bullshitting what they're doing. Those improvements are actually real. Yeah.
Yeah, excellent. And I suppose it's important for businesses and individuals to be able to see what that ROI would be to make the investment in the first place. So
I want to add, Alex, that you're seeing a lot of innovation in business models as well in the startup ecosystem, where they're going from CapEx sort of models to more OpEx models, where they're saying, look, you pay as a function of savings, or let the payment of this installation come from the savings that you get. And let's say, for example, energy costs, right? You are seeing innovation in the business models because the founders of today are very quick to understand that that's going to lead to quicker adoption, where we're seeing a lot of that. And that is, very nice for us as customers to see it. It dramatically changes the conversation.
Yeah, excellent. And that's I suppose that's a good way of being able to finance the capital investment if it's refitting windows or
Exactly.
doing something substantial.
Exactly.
That makes loads of sense. And as ESG considerations are more integral to investment decisions, how might this reshape the competitive landscape within real estate? Anyone want to take that one on?
I mean, I think you have to categorize this as what is table stakes today, right? Like Alex said, banks want an ESG compliant loan book, right? And so if we're looking at real estate financing, every bank is asking, okay, what is the EPC rating for the building? What is the plan to get there? What is the capex, right? And it's becoming an integral part of the conversations. I don't even know if it's competition anymore. I think it's achieving those levels of ESG or table stakes. Where competition, in my opinion, comes in is how efficiently, effectively you can get there, right? And for us, the way we see it is, okay, the quicker we adopt technology, we're going to be able to get to those ESG compliant portfolios a lot more efficiently from a capital and time standpoint. That's how I think that's how I look at it.
Excellent. That makes sense. So I also wondered if what your opinion was in terms of maybe like Trump, changing subjects a little bit, but in terms of the regulation, Trump getting in America and all his sort of rhetoric about there is no climate change and all that sort of stuff. Do you think that means like the US will unplug for 4 years or fall behind, or are there other sort of drivers behind the way the decisions they'll make?
It's definitely a tough one, isn't it? I don't think that they'll fully unplug. I think that the private market will continue to push this through. I think that there's been a lot of volatility in their markets as well, the same way that we're seeing across Europe. And I think that will encourage, the private markets to continue with the agenda. I think there will be probably a pullback from the government perspective, obviously based on Trump's opinions here. But I think ultimately, though, this could actually open up other markets. So to encourage like a broader transition, across Europe, China, other geographies. And we'll probably see that kind of scale more quickly as the US kind of deals with this political landscape. But yeah, it's really hard to say at this point. You've kind of got to hope maybe it might stay as it is.
My understanding from conversations is that in the last Trump administration, actually there was more uptake of ESG initiatives from the private sector than there was posts in the Biden administration. So actually the private sector is driving much more of that decision making and way they're going than the actual administration themselves. Like, as I say, regulations from overseas and Europe, for example, putting a pressure on investment because the regulations over in Europe. Do you think it's feasible to achieve both ESG goals and strong financial returns in the current market, or are compromises inevitable? Because I have seen some information about really high performing ESG businesses actually not returning as much of an ROI as other businesses. So do you think that it's inevitable that there needs to be compromise to achieve those super high ESG goals?
I'm happy to quickly give my 2 cents on this.
Always jump in. Anyone jump in whenever. I don't wait for me to direct it to you.
I don't think it's inevitable that there has to be a compromise. I think embedding ESG can just be part of business as usual, and a lot of companies are doing that successfully. I think that maybe when we think of more like the impact, like the sustainable technologies and things like that, I think that there will be a strong financial return, but there does need to be a shift in mindset in terms of timeline for that investors are going to have to kind of get to grips with. I think previously we were thinking about, if you think about the time it takes for, say, a fintech business to scale, it's going to be quite different to how long quite a lot of the technologies that we're going to need for the more sustainable changes are going to be much more hardware heavy. They're going to require more capital. And so that's obviously going to take a longer timeline to get to full scale. And I think that's probably the shift in mindset that we need to have. I don't think it's a case that they're complete compromises. I think it's more, it's just going to take a little bit longer, and we all need to come to terms with that and maybe look at other types of finance as well in that scale, in that timeline. But yeah, that's just from my perspective.
Alex or Angie, do you have any thoughts on this?
Yeah, I just had to think of. I mean, that's not so much from a business point of view, but from an opportunity in the market point of view. What I've been seeing, and I had a couple of talks with funds and clients that are actually seeing this as an opportunity as well to heavily buy into badly ranked, kind of overlooked assets, not necessarily, high street assets, more in the weeds somewhere out there. But I mean, housing crisis still is real, also in kind of B and C locations in Germany. So those are still well rented, etc. And they see a huge opportunity in buying the huge chunks of these kind of assets at a discount, improving them, using the technology and solutions that are out there, and doing this quickly and efficiently, and creating a huge amount of value. So identifying kind of opportunities out there is also turning into a business case for some.
And do you think there's particular criteria that investors should be looking out for those quick wins?
Yeah, we'd have to go into technicalities right now. One component that we are seeing a lot of movement in is PV in combination in being able to sell the electricity produced on your own roof to your tenants, because at least the business cases we are seeing out there and matched with the electricity prices tenants have to pay, you can actually turn this into a win-win. Depends on whether the law will stay as it is, but currently we can really see, depending on the roof and the size of the asset, etc., we can really see OPEX increases of or operational income increases of 20 to 30% on certain assets by being able to install PV on the roof and sell the electricity to your own tenants. And while the tenants actually save money in comparison to their former supplier. Just one very specific example.
That's a great one. I love that. I mean, and what a great opportunity. And those are the sort of things we want to, the ones that are really going to take off and find traction. So I mean, looking at those sort of ESG, I suppose the innovations and emerging trends, which ones do you think are going to take most, or on that traction point? That's like the one you mentioned there, Alex. Are there other specific sort of areas within the ESG space that will have the most return on investment, or particular will help bridge that gap between ESG objectives and financial performance? Are there particular products or techs or sort of areas within that you think will be the next one to go? Angie, do you want to take that one on? You got any thoughts on that?
Yeah, I think, look, for me, I think we're starting to scratch the surface on data and what one can do with data. And we're also starting to understand how little we have of it. So I believe that you're going to see a lot more solutions that are focused on trying to help us get our heads around consumption and operational data of buildings. I think data plays are going to be huge. I think we're going to see a lot more innovation on renewable, hydrogen, nuclear-based. I think renewable-based microgrids and hybrid heating technologies. I think we're going to see a lot more of that. And of course, we're going to have to see regulation evolve. Like we have in solar, where maybe in the beginning you couldn't sell to tenant, you couldn't sell solar power, right? But now you can. So the business model and the fundamentals change. I think you're going to start to see evolution both in terms of technology and in regulation on kind of these microgrids, decentralized energy and heating, hybrid heating technologies. And I think we're also going to see a lot of improvement in storage and battery capacities, which then makes renewable, again, a lot more viable. These are things that I expect to happen in the next couple of years.
Excellent. Yeah, that's And in terms of, I mean, we talked at the very beginning about the sort of existing housing and building stock that maybe is not going to be fit for purpose or will fall outside the regulation soon. What do we do with all that? There's could be huge swathes of commercial and residential units or property that doesn't meet the required standards. There's a potentially huge amount of problems there in terms of getting that up to speed. I mean, what can be done, or do you have any opinions on how we can sort of address that impending sort of crunch almost? Anyone have any thoughts on that particular problem?
I mean, I think in England the situation is a bit more specific than it is over here, but it's kind of tapping into what I said earlier, that the EPBD is still not implemented into national legislation. Sorry, so there's still no super precise clarity. There's at least, I mean, you can define a stranding risk by the 1.5 degree climate target, etc., but that's not. I mean, there's no penalties in place yet. It's a bit of a weird discussion again, at least in Germany, about stranding, because in the residential market it's still super vague what is actually what that's gonna mean. And on the other side, I feel again that the banks are already pushing on this, and they are pushing decarbonization way harder than the law is. So I guess it's going to be solved not so much by the legislation, but by the financial industry and people being forced to maybe sell assets. Then people that have an idea and have a concept of how to deal with them will buy them and will turn them into something valuable. That's kind of my gut feel at the moment.
So like the market forces will sort of make it happen.
It's already happening, yeah.
No, that makes sense. And then I suppose one more question. I mean, looking ahead, how can the built environment sector proactively adapt to evolving ESG standards and regulations to ensure its long-term viability and success? What should we be doing? What should business owners or property owners be doing now with the regulation on the horizon? And how long do they have to get their portfolios up to scratch? Or should they just be selling them all as quickly as possible, get that money back in?
I guess there's some housekeeping you can already do, like depending on how many you have. First of all, just get data of your assets. We see this a lot, that for decades an asset was basically an Excel sheet with rent income, and that's it. That's all there was on buildings. And I mean, there's so much more. And with ESG coming up, and with also maybe CSRD for bigger companies, reporting pressure is growing. And you don't necessarily have to know or have to decide right now what your strategy might be. You can sit this out for a little longer, but nobody's stopping you from already starting to get a clear understanding of where you currently are. Get precise data, even question maybe the data you have. It's also something we see a lot, that I mean, you think you know something, but it's actually not true once you go there. Do some housekeeping and just get yourself in the position to act once you know how you want to act.
Yeah, I think from my perspective as well, like I think, knowing what's coming up for you is like number one. Like CSRD is obviously like, it's quite a large piece of work, like to embed all the different things that you need to embed into your business. And trying to do that into a large business after the fact is going to be quite difficult. So just not being reactive about the things that are coming up. Like Alex said, just get the data, understand it, like make the pitfalls before you have to, before you're regulated, make the mistakes now, and just try and stay ahead of the curve. Be as transparent as you can be. It's going to help you in the long run, and just make sure you're prepared for the resources you're going to need down the line. Everything you invest, every minute you invest in doing this now is 2 minutes you save in the future. The bigger you are, it takes longer. So just try and do it as soon as you can. That's my advice.
That's good advice, Emily. How long do people have right now, businesses, or have at the moment, in terms of when these legislations will be starting to bite?
It depends on the size of your business. So it's not a very easy answer. It depends on how many employees you have, how much revenue you have.
It's
Depends where
rolling
you're
out.
based.
The reporting is starting to be required now, though, isn't it, for the larger businesses?
Yeah.
And
For large businesses,
and then each year it's coming down through the. So if you're a large business, you need to be ahead of the curve already. If you're a smaller business, now you need to be acting now. Otherwise, you're going to really start feeling the pinch.
Exactly. Yeah, you've got a couple of years, but it will come around quickly if you don't start thinking about it now.
Yeah, definitely. Anything else to add before we wrap it up, Angie?
No, I think like we covered at the start of the call, I think it requires looking at this differently, looking at it as a profit center and not a cost center. I think that is a fundamental shift that needs to happen, number one. Number two, I think the more of us that start engaging with early stage innovation technologies, the faster we're going to be able to sort of adopt and make them solutions that are profitable for the business and themselves. I think those two are sort of I think that's how we see it, at least.
Amazing. Well, look, thank you so much for joining me today, everyone. It's been a pleasure chatting. Thanks everyone who's watched and everyone who participated in the conversation in the chat and asked questions. It was a really interesting conversation, and thank you so much for joining me, and thanks everyone for watching.
Thank you for having us, Alex.
Thanks for having us.